This is Terrence Andre Banks with Information Age Financial Solutions, coming to you with an article I read from CNBC.com. They're actually becoming better and better at what they're reporting at. And this says a COVID-19 mortgage bailouts declined slightly, but a new foreclosure crisis could be brewing. And everyone's continuing to talk about real estate, especially if you're in the sector itself, and how, especially with interest rates being historically low, unprecedented, like no time in history to have been this low. And it's interesting because with all the forbearance and other different measures that the government has utilized to try to keep people in homes, the crisis is only going to continue to brew until we have another housing crash. But I digress. I'm going to dive right into the article and put a link inside the description as usual. As of this week, 3.7 million borrowers are still in government and private sector mortgage forbearance programs. That's about 7% of all active mortgages, according to a Black Knight, a mortgage technology and data firm. The number of seriously delinquent mortgages, that's at least 90 days past due, more than doubled from May to June, hitting its highest level in more than 5 years, according to CoreLogic. After a substantial decline last week, the number of borrowers in coronavirus-related mortgage bailout programs dropped by a lot less this week. It's a signal that homeowners still need a lot more help in order to recover from the ongoing economic ills of the pandemic. There are also indications that a new foreclosure crisis could be on the horizon. You think? As of this week, 3.7 million borrowers are still in government and private sector mortgage forbearance programs. That's about 7% of all active mortgages, according to Black Knight, a mortgage technology and data firm. These plans allow borrowers to delay monthly payments for at least 3 months, and in some cases up to a year. More than 2 million forbearance plans are set to expire this month, and so far, about 350,000 borrowers have started making their monthly payments again. Well, that's okay. On the other hand, about 3/4 of those still in bailout plans, delaying their payments and sinking deeper into debt, are now in renewals. They extended their plans by another 3 months. These borrowers are likely unemployed or receiving reduced income due to the pandemic. About 48,000 borrowers started their first forbearance plans this month, which is the lowest level since the bailouts began. So while some of the numbers are improving, the forecast for closures are deteriorating. The more seriously delinquent mortgages rose that are at least 90 days past due, more than double from May to June. The figure hits its highest level in more than 5 years, according to CoreLogic. Bearing further government support, experts predict serious delinquencies could double again by early 2022, which could seriously hurt home prices and home equity. So you got about a 2-year window before, again, in real estate functions cycles. The last time real estate bottomed out was 2012, and then started its decline. And if you follow a 10-year cycle for real estate, 2022, I think you're going to have a lot more issues in 2021, but 2022 is when you probably buy, and that's why they're probably talking about this. This is not exact science, but you can kind of give or take to plan your investment strategy accordingly and do different things. Again, I'm not giving investment advice, but just saying that's usually how cycles run. And forbearance is an important tool to help many home borrowers through financial stress due to the pandemic, said Frank Martel, president and CEO of CoreLogic. While federal and state governments work toward additional economic support, we expect serious delinquencies will continue to rise, particularly among lower income households, small business owners, and employees with sectors like tourism that have been hit hard by the pandemic. During the last foreclosure crisis a decade ago, close to 10 million Americans lost their homes, either through foreclosure or bank-approved short sales. The housing market is still recovering from that. This time around, the numbers are likely to be much smaller, as the overall market is much healthier. Okay. I'm disagreeing with that totally, because there's a lot of houses that were in forbearance that have on workout programs in different areas in the states, and these people were functioning. They should have been, when you're getting jobs that are less pay. And with this new pandemic and the way things are continually to move, and where office jobs are becoming, non-existent anymore, how is that going to affect the market as well? But I digress. Continue on. The housing market is still recovering from that. This time around, numbers are much smaller as the overall market is much healthier. Borrowers have significantly more equity in their homes, unlike a decade ago when home prices plummeted and millions were left on the water on their home loans, owing more than homes were worth. The serious mortgage delinquency rate in June was triple what it was in March and expected to move much higher, but not all these borrowers are destined to lose their homes in foreclosure. While some will go into foreclosure proceedings, many would sell rather than lose all the home equity they have gained through appreciation over the last several years. says Frank Northrider, chief economist at CoreLogic. Foreclosure filings are currently still historically low, but they did jump 11% from July to August, according to Adam Data Solution. Of course, they'd be historically low if they're not going to put them on the books and put them out for forbearance. This has been unprecedented than we have had before. Several states, including Florida and New York, that have had foreclosure moratorium in place have recently loosened some of their restrictions, which may explain the unexpected bump in the monthly numbers, which also goes to why the numbers have been historically low, according to what you're saying here. Vice President Reality Track, a subsidiary of Adam, many courthouses across the country have been closed or have had their caseloads dramatically reduced during their pandemic. It would be interesting to see if foreclosure starts to continue to increase as these courthouses begin to reopen. I'm pretty sure they probably will, unless they do something else to try to push the can down the road. Again, real estate functions in cycles. The 10-year one, the last time it bottomed out was 2012. Still got a couple years to go. Interesting time to be alive. Definitely do things differently. Articles worth your attention. May disagree with a couple points there, but still worth to pay attention to, especially as real estate a continuous factor in how we live and something that is definitely needed by all. So if this video has been any value to you, please subscribe, leave some comments, hit the like button, and until my next video, I'm out.